Hello everyone, welcome to Satoshi Finance. Today, we're diving into the exciting world of investment strategies for beginners. Whether you're just starting on your financial journey or looking to enhance your investment knowledge, this video is tailored for you. In the vast landscape of personal finance, investing stands as a cornerstone for achieving long-term financial success. At its core, investing is the art of making your money work for you, a strategic dance with the markets aimed at growing your wealth over time. In this section, we embark on a journey to demystify the fundamental principles that underpin successful investing. The concept of compounding, often hailed as the eighth wonder of the world by Albert Einstein, takes center stage in our discussion. Imagine your money not only earning returns on the initial investment, but also on the accumulated interest or gains over time. Compounding, the snowball effect of wealth generation, is a phenomenon where your money earns returns, and those returns in turn generate more returns. We'll delve into the mechanics of compounding and showcase its incredible potential to multiply your wealth exponentially. Moreover, we'll emphasize the strategic advantage of starting your investment journey early. Time is a precious ally in the world of investing, and the earlier you begin, the more time your investments have to weather market fluctuations and benefit from the compounding magic. Whether you're a recent graduate, a young professional, or someone thinking about retirement, understanding the power of compounding and the importance of initiating your investment journey promptly will set the stage for financial success and security in the years to come. So let's dive into the intricacies of investing and uncover the keys to unlocking your financial potential. Navigating the world of investments requires a deep understanding of your own risk tolerance. In this section, we shine a light on the critical importance of comprehending and embracing your risk threshold. Risk tolerance is a personalized measure of how much volatility and market fluctuations an investor can endure without losing sleep. We will delve into the factors that influence risk tolerance, such as age, financial situation, and individual temperament. By the end of this exploration, you'll be equipped with the knowledge to assess your own risk tolerance, a pivotal step towards constructing an investment portfolio that aligns seamlessly with your financial personality. Moving beyond risk tolerance, we'll pivot to the significance of defining clear financial goals. Your financial goals act as the North Star guiding your investment journey. Whether it's purchasing a home, funding your children's education, or securing a comfortable retirement, these objectives provide the framework for your investment strategy. We'll discuss the process of setting SMART, specific, measurable, achievable, relevant, time-bound financial goals, and how this clarity can influence the selection of investment vehicles. Aligning your investments with your goals not only adds purpose to your financial endeavors, but also serves as a compass, ensuring that every investment decision contributes meaningfully to your long-term aspirations. So let's delve into the intricacies of risk tolerance and financial goal setting, empowering you to make investment decisions that resonate with your unique journey. In the intricate world of investing, the age-old adage, "Don't put all your eggs in one basket," encapsulates the essence of diversification. In this section, we unravel the wisdom behind this phrase, exploring the strategy of spreading investments across different asset classes to mitigate risk. Diversification is akin to building a resilient fortress for your financial portfolio, shielding it from the unpredictable winds of market volatility. We will delve into the reasons why having a diverse range of investments is a prudent move, understanding that different asset classes respond differently to market conditions. As we navigate the terrain of diversification, we'll discuss the art of balancing your portfolio, a key component of effective risk management. We'll explore the roles that stocks, bonds, and real estate play in creating a well-rounded and resilient investment portfolio. Stocks offer growth potential, bonds provide stability, and real estate introduces a tangible asset with the potential for appreciation. By understanding the unique characteristics of each asset class, you'll be equipped to craft a portfolio that not only aligns with your risk tolerance and financial goals, but also weathers the storms of market fluctuations. So, let's embark on the journey of diversification, unraveling the strategies that safeguard your financial future by distributing risk intelligently across various investment avenues. Dollar cost averaging, DCA, emerges as a beacon of financial prudence, particularly for beginners navigating the unpredictable waters of the stock market. In this segment, we demystify the mechanics of DCA and elucidate why it stands as a powerful strategy. Rather than attempting to time the market, which can be a daunting task even for seasoned investors, DCA operates on the principle of consistency and discipline. We will unravel the simplicity behind this strategy, regularly investing a fixed amount of money at scheduled intervals, regardless of market conditions. The brilliance of dollar-cost averaging shines through its ability to act as a shield against the tempestuous nature of market volatility. As we explore the depths of this strategy, we'll illustrate how it allows investors to buy more shares when prices are low and fewer when prices are high. This automatic adjustment to market fluctuations eliminates the need for constant market monitoring and the emotional roller coaster associated with trying to time the market. DCA transforms the inherent volatility of the market into an opportunity, fostering a disciplined approach that not only minimizes risk, but also instills a sense of control and confidence for investors, especially those just embarking on their financial journey. So let's delve into the intricacies of dollar-cost averaging, unveiling its power to smooth out the investment journey for beginners and seasoned investors alike. Enter the world of investment with the simplicity and effectiveness of index funds, a beacon for beginners seeking a solid foundation. In this section, we'll illuminate the concept of index funds and unravel the reasons behind their popularity among novice investors. At its essence, an index fund is a type of mutual fund or exchange-traded fund, ETF, designed to replicate the performance of a specific market index, such as the S&P 500. This straightforward approach offers investors an opportunity to gain exposure to a broad array of stocks, without the complexity of handpicking individual companies. Delving deeper, we'll explore the unique advantages that make index funds an attractive choice, particularly for those starting their investment journey. One of the key highlights is the broad market exposure they provide. By mirroring the performance of an entire index, investors can capture the overall market trends, rather than trying to outsmart the market by selecting individual stocks. Furthermore, index funds are celebrated for their low fees, a crucial consideration for any investor. The simplicity of this investment vehicle not only minimizes costs but also aligns seamlessly with the principles of long-term passive investing. So, let's demystify the world of index funds, uncovering the reasons why they serve as a valuable cornerstone for beginners embarking on their investment adventure. Embark on the rising trend of exchange-traded funds, ETFs, a dynamic investment vehicle that has garnered increasing popularity among investors. In this segment, we'll delve into the world of ETFs, unraveling their key distinctions from traditional mutual funds and shedding light on why they are emerging as a suitable option, especially for those navigating the complexities of the financial markets. Unlike mutual funds, which are priced at the end of the trading day, ETFs trade on the stock exchange throughout the day, offering real-time pricing. This flexibility allows investors to buy or sell shares at market prices during trading hours, providing a level of intraday control that can be advantageous in certain market conditions. As we navigate the landscape of ETFs, we'll explore the liquidity advantages they bring to the table. ETFs, with their ability to be bought and sold on the stock exchange like individual stocks, boast high liquidity. This characteristic ensures that investors can easily enter or exit positions without significantly impacting the market price. Additionally, we'll discuss the flexibility inherent in ETFs, as they cover a wide array of asset classes, from stocks and bonds to commodities and real estate. This versatility allows investors to tailor their portfolios to specific market views or investment strategies. So, let's unravel the allure of ETFs, understanding why their popularity is on the rise and how they can be a valuable addition to the toolkit of investors, both seasoned and novice alike. Embarking on the journey of smart investing, it becomes evident that research is the bedrock upon which sound financial decisions are built. In this section, we emphasize the critical role that research plays in the investment process and why it is a non-negotiable element for investors seeking to make informed choices. Conducting thorough research enables investors to understand the companies, industries, or assets they are considering for their portfolio. It acts as a compass, guiding investors through the intricate landscape of financial markets and helping them make decisions aligned with their risk tolerance and financial goals. To empower beginners with the tools for effective research, we'll explore various resources and methodologies, with a particular focus on fundamental analysis. Fundamental analysis involves evaluating a security's intrinsic value by examining factors such as financial statements, management quality, and industry trends. We'll introduce beginners to online platforms, financial news sources, and educational materials that can serve as valuable resources in their research endeavors. Understanding the language of financial statements, key performance indicators, and industry dynamics equips investors with the knowledge needed to make informed decisions. So let's delve into the importance of research in the realm of investing, arming beginners with the tools and insights needed to navigate the complexities of the financial markets with confidence. The wisdom of successful investors often lies in their ability to embrace the virtue of patience and adopt a strategic, long-term perspective. In this segment, we delve into the significance of thinking beyond short-term market fluctuations and focusing on the enduring trajectory of investments. Long-term thinking serves as a cornerstone of financial success, allowing investors to ride out the inevitable peaks and troughs of the market with resilience. We'll stress the importance of maintaining a disciplined approach, steering clear of impulsive decisions driven by short-term market volatility. To illustrate the power of a long-term perspective, we'll explore examples of legendary investors whose steadfast commitment to their investment philosophy paid off handsomely. Figures such as Warren Buffett, known for his patient and value-driven approach, and Peter Lynch, famed for his mantra, "Buy what you know," serve as inspirations. By examining the success stories of these iconic investors, we aim to instill a sense of confidence in viewers, reinforcing the idea that wealth creation is a journey that unfolds over time. So let's immerse ourselves in the wisdom of the investing greats and uncover the rewards that come with adopting a patient and strategic long-term perspective in the dynamic world of finance. Before setting sail into the waters of investments, it's imperative to anchor your financial journey with a solid foundation, namely, an emergency fund. In this section, we emphasize the critical importance of having a financial safety net. An emergency fund serves as a cushion against unexpected expenses, providing a sense of security and preventing the need to dip into investments or accumulate high-interest debt during challenging times. We'll explore how to determine the optimal size of an emergency fund, taking into account individual circumstances and financial goals. By establishing this financial safety net, investors can approach their investment journey with greater confidence, knowing that they are prepared for unforeseen circumstances. Equally paramount in the realm of financial stability is the management of debt. We'll delve into the nuances of debt management, particularly focusing on the impact of high-interest debt on long-term financial goals. High-interest debt, such as credit card debt, can act as a significant hindrance to wealth accumulation. By understanding the detrimental effects of carrying such debt, viewers will gain insights into effective strategies for tackling and reducing it. From debt consolidation to creating a repayment plan, we'll provide practical tips to empower individuals in taking control of their financial well-being. So let's navigate the crucial terrain of emergency funds and debt management, establishing a robust financial foundation that propels us confidently into the world of investments. As the financial landscape is dynamic and ever-evolving, the importance of regularly reviewing and adjusting your investment portfolio cannot be overstated. In this section, we underscore the significance of staying proactive in monitoring your investments. Regular reviews enable investors to assess the performance of their portfolio, ensuring that it remains aligned with their evolving financial goals and risk tolerance. We'll discuss why this ongoing evaluation is essential in adapting to changing market conditions, seizing new opportunities, and mitigating potential risks. By emphasizing the need for vigilance, we empower viewers to take control of their financial destiny and make informed decisions to optimize their investment strategy. However, the process of monitoring investments can seem daunting, especially for beginners. To ease this concern, we'll share practical tips on how to keep track of your portfolio without becoming overwhelmed. From leveraging financial apps and tools to setting up automatic alerts, we'll explore strategies to streamline the monitoring process. The goal is to strike a balance between staying informed and avoiding the anxiety that can come with constant market watching. By the end of this section, viewers will be equipped with the tools and insights needed to navigate the ongoing journey of investment monitoring, ensuring that their portfolios remain on course for long-term financial success. So, let's dive into the art of review and monitoring, demystifying the process and empowering investors to navigate the ever-changing currents of the financial markets with confidence. In wrapping up our exploration of investment strategies for beginners, we've laid the groundwork for a successful and informed financial journey. Remember, the journey of investing is a marathon, not a sprint. In conclusion, the key takeaways are to start small, maintaining consistency in your investment approach, and being open to adjustments as needed. The importance of aligning your investment strategy with your risk tolerance and financial goals cannot be overstressed. By incorporating concepts like diversification, dollar cost averaging, and a long-term perspective, you're not just investing, you're strategically building your path toward financial success. If the insights shared in this video resonated with you and you found value in understanding the fundamentals of investing, I encourage you to take a moment to show your support. Please consider liking this video, subscribing to our channel for more insightful content, and sharing it with others who might benefit. By doing so, you not only contribute to the growth of our community, but also help others embark on their journey to financial literacy. Don't forget to hit the notification bell to stay updated on our future videos. Thank you for joining us on this exploration of investment strategies for beginners, and we look forward to being a part of your ongoing financial education. Happy investing!